At WWL, we have a policy of open and transparent communication with all our staff, patients, members and general public. This covers operational performance, quality standards and safety record, but also financial position.
The financial position of a large acute district general hospital are an important measure of success, and these are the results of the Trust for the 2013-14 financial year. At the 31st of March 2014, the Trust is reporting an income figure of just over 262 million. This is the first time in the Trust's history that income has exceeded 250 million, and it is in fact an increase of 5.1% on last year. The vast majority, 93%, of the Trust's income comes from clinical activity. That is to say, it's the income the Trust is paid which relates directly to the treatment of patients. On this graph, other income includes such items as research and development, catering and pharmacy income, where services are provided outside of the Trust. 92% of income is paid to the Trust by clinical commissioning groups, with the Trust's host commissioner, Ashton Lee and Wigan, paying approximately 176 million for services provided to patients from inside the borough. We've also seen an increase in expenditure in the year, with a total of 258.5 million being spent. This is a 5.2% increase on last year, which is marginally bigger than the increase we saw with income. Pay costs make up by far the largest element of overall expenditure, and in the year just over £167 million was spent on pay. This is no surprise though, as staff are the most important resource within a hospital. Efficiencies through cost improvement plans are crucial to the Trust's financial success. Over £12 million of CIP was generated in the year, a significant improvement on the prior year. The Trust's audited accounts will actually show a deficit of 5.8 million. The Trust's accounts are calculated in line with government legislation and internal accounting standards. These dictate that an item called impairments must be incorporated with the income and expenditure statement. Impairments are a non-cash item. Essentially, they represent the value of assets no longer used by the Trust. As part of the site development programme, the Trust has demolished a number of buildings, and the associated impairment cost is £9.8 million. To gain a better reflection on the Trust's financial performance relating to day-to-day activity, impairments can be omitted. The Trust is therefore reporting an operational surplus of 4 million, which equals the budget set for the year. This is excellent news and important for the future development and improvement of the Trust for patients and staff. There are some other notable measures. In 2013-14, the Trust spent 19.4 million on capital expenditure. This is by and large expenditure on buildings and equipment, and it is the most the Trust has ever spent in 1 year. 3 notable schemes are the Hanover building at Lee, Cancer Care Suite at Wigan, and 2 operating theatres at Wrightington. The Trust's cash balance stands at 20.3 million, and this will be used to fund future site improvements. Finally, Monitor, the Foundation Trust regulator, rates the financial strength of an organisation using its Continuity of Services rating. And for the 2013-14 financial year, the Trust achieved a CSR of 4, the highest possible.
I'd like to commend this Trust on a number of areas. Firstly, they produce excellent, well-structured and clearly linked working papers to support the financial statements. This is really helpful in terms of us delivering a high-quality audit. Secondly, they take great lengths to work with external stakeholders to ensure that both the accounts and the annual report are transparent, clear, well-written and are set out in a language that everyone can understand. Clearly, as auditors, we look very closely at the financial performance of the organisation and its financial strength. And we're pleased to note that this year, once again, it's had a strong financial performance. It's got a strong cash balance, It's got a high risk rating, and when you compare it to the other trusts across Greater Manchester, it compares very favourably in terms of its overall financial position.